You guys can hear me now, right? Can you hear me now? Okay. I'm going to hit the record button. All right, good morning. Today is Thursday, the 9th day of April 2015. All right, well, let's start trading. All right, on soybeans right now, this is a momentum short trade. It's going down into dynamic support, so I'm not going to look to take that trade. On gold, we don't really have anything right here that we can trade. We don't have anything over here that we can trade. As a matter of fact, none of the markets have anything that we can trade right at the moment. No, you can't hear me? Okay. Oops. Move that over here. And this. All right. Now the Russell's moving up. Crude had a big move down right here. See, I changed my cursor so you guys can see it better.
Hey, Mike.
So I can see it better. Hey, Bert. How's it going this morning?
Good.
How'd that meeting go yesterday? Pretty well?
Yeah. It was just, wasn't Mike. It was just, it was CEO Morgan.
Yep.
So he came in and we talked for not very long. He had to catch up plane. So, but yeah, it worked out well. He's got some things that he's working on. I'll share with you.
Yeah, I saw that data thing that you had mentioned. That's good. We were hoping for that, right? 63.50 is the high on this. 62.50 will be the low over here on soybeans. 63.50 is the high. 62.50 will be the low. So we're down closer at 62.50 on soybeans would be a short trade. Cycle's going too steep here on the crude to go against it. And an up close over here on the Russell would be a long trade. 61.8 is the low. 62.2 would be the high. There it is right there. 62.2. All right. Stop at break even on that. Oops. All right. And I'm out of break even. And I'm hitting cancel all. And okay. That was really fast on the Russell. I got long on the up close right here. My trend line's not drawn right. I was trying to draw it, but the trade was coming together. I'm just going to move that out of the way. The right trend line would have been like this. Something like that. Okay, it hasn't put in a lower swing there yet. I mean a higher swing. Now it has. Okay, so now we can look to go long again on the Russell. And over here on the gold, soybeans, we're short. We're short on the soybeans, 62.5. And on the gold, this is a momentum short trade at 94. At 94 even. Again, with a momentum trade, as soon as you get profit in the trade, you should move your stop to break even. Right now, your stop should be a plus something. Or, at break even at the very least. Okay. I didn't get into that. I tried to get into it, but I didn't get into it. Okay. I am in the soybeans, though. I'm short the soybeans. I'll show you that in a minute. All right, we got a high on this 94.4. We're going to have a low 94, so down close there at 94 on the gold would be a short trade. No trade here on the crude. Okay, let me show you the soybeans. Hold on. Here they come. I'm short the soybeans at 62.5. Okay. Make sure my stop's in the right place. 64 and a half. Yes, it is. Okay, that's all good. We didn't get a pull away from the BBC after the cross right here, so there's no trade there. Over here, we wanted to see a down close on this bar right here. Should have been right there at 93.9. On the crude oil, just an up close of this bar at 51.4, 51.04 would be good. All right, right there. And I'm long at 51.05 on the crude. Okay, there's my crude and soybeans. I'll bring those over again. I'm in at 62.5. If it gets down to 61.5, I'll move my stop to break even. Okay. 4 ticks profit or close above the MA1 here on the crude. That's what it takes to move the stop to break even. 4 ticks profit or close on the other side of the MA1. The Russell just had a short trade here that I'm not in. Right there. Okay. We never got to pull away here on the natural gas. Okay, it needs to pull away from the BBC after the cross. Make sure my stop's in the right place here. It is. All right, stop to break even on the soybeans. Now I'm going to put a target down here, right there at 60 and a half. And I'm going to drag my stop to +4. Okay, if we get my target here, that would be the goal for the day. It's trying to get down here to 960. Of course, if I get my target there and I stop out over here, that would not be my goal for the day. But we'll see what happens. There's my goal for the day. Okay, 1 trade, 2 trades. What time is it? 9:38. Okay, and there I stopped out. So 1 bean, 8 ticks, 1 crude, minus 8 ticks. But we got the goal on the beans. So it's 8 minutes, 2 trades, 100. Let me take off that other stop I got over there. All right. Now let me mark those trades so you can see them both. I shorted soybeans over here, took profit down there. I went long on crude, crude right there, and I stopped out right there. All right. See, Jim, are you in here right now? Jim C? See how we're trading below the BBC and we have bullish divergence here? That's indicative of a cycle reset. Okay. We went over it last night. So what's likely to happen here is we're going to get a bigger move down. It's going to go down below this level right here, below 93.4. The cycle will move down and we'll start getting more short trades. That's what's likely to happen. Okay. That's what usually happens after a cycle reset. Okay, I'm gonna upload last night's workshop. What was last night's number 203? Being taken in. 931. I'm sorry, baby. Okay. For a new swing high, I need body above previous body and disregard wicks. Yes, you need to have a close above it. You gotta have the close above there, Paul. Okay. Disregard the wicks. The wicks just prove the point that there's resistance there. Okay. All right, we have a lower swing in place over here on the crude oil now. Did I even give you eyes yet? Did I ever do that? Sorry about that. Make organizer. There you go. Okay. All right. So we got a lower swing in place here on the Russell. And that's that. All right, it's starting to pull back now. The Russell is. Okay, it's tested the BBC, but the cycle's going to turn, I think. It may. Okay, it didn't. There's a short trade right there at 60.9 on the Russell. Okay, I'm trying 60.8 right here, and I just filled at 60.8. I'm short 60.8 on the Russell. 4 ticks profit, stop to break even. I'm just going to lock in a couple of ticks here. Get rid of my original stop, and we'll see where it goes. It should go below here. It should get down below 59.9, 60.1, sorry. That's where it's trying to go right now. Lock in 4 ticks, and I'm flat with 4. Okay. Now it's trying to get down below right here and put in a lower swing. Okay, that's what it's trying to do, and that's what it just did. Any of you guys still in? Uh-oh, I lost my question box. You're still in, Erm? Good. Where was the question box? I mean, no, where was the cycle reset? Was it on here? Hang on. A down close of this bar right here is a short trade. 1260 is the high. No, 60.1 is the high. 59.7 will be the low. Okay, hang on. That's changed now. Going to draw a trend line. Going to draw a trend line like that. 60.3 is the high, 59.9 would be the low. A down close at 59.9 would be a short trade there on the Russell. Okay. Yeah. So if this bar closes down on the Russell, that would be a short trade. The cycle's about on the edge. If the bar closes up, then the cycle would be going up too steep to take a short trade. Are we trending over here? 51.12. No, we're not. All right, there it is on the Russell, guys. That was the down close I was looking for. Here is my down. There is my stop. 8 ticks risk on every trade. Okay. I think it's going to stop me out. Probably going to try to pull back up here. We'll see. Maybe not. All right, so we need 4 ticks profit or a close below the MA1 over here on the Russell to move my stop to break even. So if we close below the MA1, I'll move my stop to break even. So if the current bar closes down, I can take my risk off this trade. You'll closed up. That's not good. It needed to close down there. This level right here is pretty significant on the Russell, 60.4. Russell zone 59.60. Okay, so I'm shorting out of the zone. I don't know why I don't have a zone on there. I thought I put that on the other day. I'm shorting right into the zone. That's what you're telling me. 59.60. Okay, well then I'm just going to exit the trade right here. Okay, that was a mistake, and I just lost 2 ticks on it. Or 2 or 3. Let me see. Ticks. 3. It was a mistake to be in that trade. Look, and I just would have been able to get out at break even. Okay, I didn't realize it was a weekly trading zone there. I wouldn't have been shorting it. But I still have to take responsibility for what I did. All right, over here on crude oil, I'm gonna draw the trend line like that. Okay. I didn't realize the Russell was in the zone that time. Sorry, guys. That was my mistake. You all could have gotten a little bit of profit on it. I thought I saved my workspace before I closed it, but you know what? I might have last night during the partners meeting. I tried to clean everything up, and I might have deleted everything. It's got a long way down to go right here. If it's going to go down, it should get all the way down below here. Okay. Again, this is looking like a cycle reset here because we have bullish divergence, so we're trading below the BBC. So what should happen is you should get a big move down. It should drag the cycle down, and then we should get more short trades. Okay. And here comes the big move down to move the cycle down. The ray is supposed to extend right. Why is that not extending? Anyway. And here's the more short trades that I was just telling you about. Okay. You got 16 out of that? Good, Ray. I mean, I made a mistake by putting it on, but it was definitely a good enough trade. Just like this one right here. Okay, this is not a mistake putting it on. This is an actual short trade, if you can get it. Okay. 57.6 right there is the spot. I'm in at 57.5. Need 4 ticks profit or a close below the MA1. What do we have
Morning,
for
Mike.
news today? Hey, good morning, Dwayne. I am uploading last night's workshop as we speak.
Okay.
I am trying to upload last night's workshop as we speak. Okay, I just stopped out of that. All right, 10 o'clock we have wholesale inventories, and at 10:30 we have natural gas. So we're waiting right now. It's 9:53. We have wholesale inventories coming out at the top of the hour. It didn't snow today, did it, Al? I heard they had snow in New Hampshire. It did snow? Oh man, that's just wrong. I'm going back there tonight. Just for a day though. All right. Ron, all the yellow arrows are the actual trades that I take. All right. On crude oil, it's starting to pull back a little bit. We need this bar to close so that we can look for the close down. Okay. Now we can look for the down close of this bar. It would be a momentum short trade, 5109 down to 5105. Right there. Okay. It's a momentum short trade. Okay, which means as soon as you get any profit in the trade, stop goes to break even. All right. Okay, my stop's break even. I'm in at 5104. I'm actually just going to lock in a couple of ticks. And I'll lock in 4 ticks. And I'm out with 4. Okay. From there to there. That was my trade, Ron. Your eyes saw it, but your brain didn't make your hand do anything about it. Is that what you're saying, Hal? 5110 is the high, 5106 will be the low. Yeah, it's the mouse's fault. 5110 is the high, 5106 will be the low. 5106 isn't going to be low enough. We're going to need to go down to 5102. Probably. Okay, on the crude oil. Oh, okay. In actual time, not after the fact. No, I'm not going to do that, Ron, because it would be lines all over the charts, and there's already enough on the charts. 5106 is the high, 5102 will be the low. I'm telling you ahead of time. I'm just telling you right now. 5109 is the high on this, so 5105 would be the low. So what I'm saying is short a down close at 5105. That's what I'm saying, Ron. Okay, now it didn't close down, but it's testing the BBC, so this bar is going to high at 5114. A down close at 5110 would be a short trade. Okay, so you could short a down close at 5110. I'm telling you ahead of time where the trade is. There it is, 5110. Ding ding. All right. Stop to break even. It went 4 ticks in profit down to 51.06. That's when I put my stop at break even. Okay. So I told you ahead of time to short 51.10, to short a down close at 51.10. Stop at +4. Okay, now I'm flat. All right. That's all we got right here. Yeah, that stop out on the Russell kind of hurt me, Herman. That's what got me down. I'm back to break even on crude. I'm up on soybeans, and I'm down on the Russell right now. No, the bar color, it's a paint bar. These are range bars, so every bar is going to close at the top or the bottom of the bar. Okay. Okay. Every single bar is either going to close at the top or the bottom. The open could end up being in the middle of a bar, but the close is going to be either at the top or the bottom. Can't rely on that all the time, Herman. If you want to, Clark, but you don't have to. You know, usually there's plenty of opportunity, and if you use just 1 or 2 markets, usually there's plenty of opportunity. I mean, I do a whole bunch because, well, there's a whole bunch of people, and they want to see a whole bunch. Is there a momentum long trade and at what price? At 932. Come on, data. After it got out of the weekly trading zone, there was right here at 61.1, then again right here at 62.1. Okay, so 61.1 and 62.1. Brad. Okay, down close of the current bar. Never mind. That's our trend line on crude oil. All right, on gold, this would be a momentum long trade, 95.2 up to 95.6 on the gold. So an up close at 95.6 on the gold would be a long trade. Be a momentum long trade, which means as soon as you get any profit in the trade, you got to move your stop to break even. Yes, Clark. I mean, if you could do it, then, you know, I don't expect people to be able to trade this many markets and talk to other people and answer emails and upload software, all that kind of stuff. That we don't expect that. 95.0 up to 95.4. 95.4 would be the long trade on the gold. See, Ron? An up close here at 95.4 would be a long trade. You would look to get long on an up close at 95.4. I'm telling you ahead of time. Over here on the Russell, it's pulling back. Not crude inventories. The natural gas inventories come out today, Marion. All right. you see how there's red on the cycle down here? That means we have to close above the trend line. And I got to redraw the trend line because we got a wick sticking up. All right. So we didn't get the up close there. It pulled back to 94.8, so that's going to have a high of 95.2. Then from 95.2, it'll probably go up to 95.6. That's what you'd be looking for. Over here on the Russell, 58.7 is the low, 59.1 would be the high. So an up close at 59.1 would be a long trade on the Russell. On the crude, there's a long trade right here at 51.08. I'm trying 51.09. And on the Russell, 58.6 up to, never mind. All right, I didn't get filled on the crude. So I took my order off on the crude, but the entry was right there. We got to extend this trend line so you can see when it closes above it, if it closes above it. Did anybody get the crude trade? What the heck, that thing? Yeah, okay, forget the Russell anyway. All right, it's going right into a weekly trading zone. This should be, I'm just going to do that, make it infinite. There. Okay. All right, and up close on the current bar on crude oil will be a long trade. Right there will be a long trade on the crude. Yeah. 51.26 was the spot there on the crude. Okay. Again, I was trying to draw the thing, so I missed it. It was right there. I don't know if any of you guys got that. I was telling you and trying to draw it. That's why I missed it. Okay, over here on the gold, 94.9 is a low. Right there, 95.3 is a long trade. Okay, 95.3 is a long trade there on the gold. We're testing the BBC on the crude, but we've got to close above the trend line on the gold. Close above the MA1 or Fortrex profit and the stock goes to break even. Okay, you're looking for the green line to get up into the cycle here. That's what you anticipate. Whenever the green line is pulled away from the cycle, you anticipate that it's going to go back up into it, like it just did here a couple of times on the crude oil. Okay. Now, Fortex profit or a close above the MA1 is what you're looking for on the gold. Okay. We want to see that moving up. On the Russell, down close of this bar would be a momentum short trade. 55.8 is the high. 55.4 would be the low. 55.4 is also the low of the day on that. The easy way is down, it seems like. All right, we didn't get the down close on that bar on the Russell. Oops. Let me fix this. Okay, so a down close of this bar, which now has a high of 56.3, will have a low of 55.9 on the Russell. Down close of that bar would be a short trade. Okay, it closed up, not down. Make an adjustment. 56.2 down to 55.8 on the Russell. Okay, down close at 55.8 on the Russell would be a short trade. And there's no trade over there on the soybeans right now, sadly. Okay, run. I'll be here. Okay. 55.8 right there was a short trade on the Russell. 55.8. It went 4 ticks in profit down to 55.4. So your stop should have gone to break even. Okay, on the gold finally. We got the close above the MA1. Stop can go to break even on that. Okay. waiting and waiting and waiting on that. Finally got the close above the MA1. It should get up above 95.9. It should get up above here. Come on, get up there. All right. Now the gold should put in a higher swing here. I'm going to lock in a couple of ticks profit on it. We want, see how the green line is up into the cycle right here? I'm going to lock in 3 ticks profit here. Because it should, if it doesn't put in a higher swing, it's definitely going to pull back. Okay. Okay, so we got 3 out of the gold. All right, and crude oil right now is about to set up a trade. It's about to set up a short trade. All right. We need crude to pull back farther than that. Wow. Look at the Russell. It's just not sure what to do over here. Okay. It's going to high at 55.1. It's going to have a low of 54.7. That's not going to be low enough. Okay, and crude did close up. I'm glad. Now we can draw that trend line. So on cruise, we've got a high of 51.13. We're going to have a low of 51.09. That would be low enough. Okay, down close at 51.09 on the current bar on crude would be a short trade. Okay. 55.3 is the high on the Russell. 54.9 would be low enough. Right, that's a short trade right there on crude at 51.14. And stop to break even. Stop to +4. And I'm flat with +4 on crude. Okay, on the Russell, we're going to need a down close at 54.9 still on the Russell. Okay, sorry I didn't show you my DOM there on that crude, but it was right there. It's right there. All right. Well, I'm a short 54.8 now on the Russell. I was just about to bring my DOM over so you could watch that. But here it is, 54.8 on the down close right there. Okay. What we want to see happen is the green line get down into the cycle or close below the MA1. 4 ticks profit or close below the MA1, whichever happens first. Oops, there's a close below the MA1 right there already. Oops. Okay, so I'm in and out of that. You see right there, it closed below the MA1. I was in at 54.8 on that. And out at 54.8. Natural gas is starting to pull back. Step 1, bullish cross. Step 2, price pulls away. Step 3, it pulls back. Over here we have a blue cycle above the green line. Okay. You see on the gold, we just have a wick up here. It didn't actually put in the higher swing. See that? It didn't close up above there. That's what I want to see. Oops, audio was muted. Sorry about that. You're right, John. That's what I was just explaining it. Right here we want to put it in a lower swing. We want to see a close down below this level. Same thing's happening over here on gold right now. We want to see a higher swing, a close above this level. Okay. If we don't get a close below this level right here, then this is bottoming action. Okay, there. Now it's trending. Now it's trending. Hi and happy Easter, Jim. All right, the Russell, this is the trend line. All right, needs an up close on this bar. 56.4 would be the high on that. Oops, nope, not anymore. Well, an up close on this bar would be a bounce off the BBC at 56 even. Okay. 55.4. If we get an up close at 55.4 and the cycle stays blue, it would be a long trade. Okay? It is. It did. And it is. 55.5 I'm in. Looking for 4 ticks profit. There's 4 ticks. Stop to break even. I'm going to put my stop at plus 1 tick here because the Russell has not been good to me today. Yeah. Okay. This down close right here on crude is a momentum short trade from 50.96. It's too late to get into it now. It's already gone a couple of ticks in profit. Over here on the natural gas, an up close of this bar at 630 would be a momentum long trade, but it's going right into dynamic resistance, so I'm not going to take that. And that's all we got. time is it? 10:18. All right, 51.02 was the high on this. 50.98 would be the low. Down close at 50.98. Now 50.97. Now 50.90. Now 51. 51. Okay, down close at 51 on the crude would be a short trade. I don't think it's going to close down though. Nope. Okay, forget the crude trade. It never happened. All right, we got the lower swing in place here on the Russell, but we have the wrong kind of divergence. You see that? Ow. Crude at 9/10. I don't know, Joe. You're talking about an alert? Okay, on the crude right now, 51.06 is low, 51.10 would be the high. So an up close at 51.10 on the crude would be a long trade. Okay, and up close at 51.10 on crude oil would be a long trade. It's 10:21. We have natural gas inventories coming out here in a few minutes. Okay. Okay. So on natural gas, I am going to put a buy at 649 and a sell at 599. Okay, that's my bracket for the gas. A buy at 699. I'm sorry, 649. And a sell at 599. Okay, there's the bracket. Okay, crude oil, no trade. Okay, no trade on the crude. This is DT Pro, Chris. This is DT Pro. 649 on the long side and 599 on the short side for the natural gas bracket. Okay. Currently, it's 10:23. Currently, we are -6 on the Russell, +8 on soybeans, +4 on crude, and +3 on gold. So we're up $110 right now.
I'm guessing Joe's question was not about a concierge alert because that's not where the prices are.
Okay.
Not 5109. In fact, crude alerts have not triggered at all today.
Not yet.
been a-
All right, on the Russell.
Pretty quiet session.
Oops. 56.8 up to 57.2 on the Russell. Okay, now it's down at 56.7 up to 57.1. Okay, that's better. I'd rather have 56.5 up to 56.9. Okay, and up close there at 56.9 will be a long trade on the Russell. There it is, 56.9. Ding ding.
There was a short trade at 1011, Joe. Bearish cross, price pulled away, price pulled back, down, close, sell the open of the next candle. I don't know if that's what you're referring to or not.
Stop at break even on the Russell. Stop at plus. Check, what am I, -6 on the Russell? Stop at +3, 4, 4, 6, 7, and I'm flat with +7 on the Russell. Okay.
Here's the market made 7 ticks available on that trade. You then pulled back, touched the BBC, did another down close, and then your entry would have been 51.10, and the swing low after that was 50.92. So I'm not sure where you got tripped up there.
I don't know
highlighted
what
on
that
the radio
means.
show today.
All right, on the natural gas, well, we've got the inventories coming out, so I'm not going to trade anything right here. The inventories are coming out in 3 minutes on the gas. Okay. Steve, I'm not sure what that means. TSA short on RLM was FSO. That sounds like a lot of acronyms that I don't know the meaning of. TSA, that's at the airport, right? The trade alert short was a full stop out. Okay.
Very possible. I haven't looked at
On
it.
the Russell. I haven't either. There's a short right here on the Russell. I mean on crude oil right now. The short was actually from right down here at 50.88. I am not in it, but if I was, it would have stopped me out, I believe. Now it probably will go down. It'll probably bounce down off the BBC right here. But we just have another minute and a half. to the minute and a half, and then we can trade the natural gas inventories. Okay.
Now the most recent trigger on the Russell, let's see. It was a break even. It went 4 ticks in your favor. Move stops to break even.
23 to 27. Again, it's the gas. I'm not doing the gas. 45 seconds to the natural gas inventories. Joe, you got to put your entry 1 tick away from the close of the bar. So if I say an up close, like on this bar right now, if I said an up close is 627, you put a buy stop at 628. Okay. Now, right now we have the natural gas inventories coming out. So I need to get my natural gas DOM ready to go over here. And we'll see what happens here in about 10 seconds. Well, it's really thin on the bid side right now. Really, really thin.
You're very welcome, Steve.
And that's why it was really thin on the bid side. Okay, stop to plus, well, my stop's at 580 right now. Okay, my stop is now at 575 and I'm not. So. Okay. I didn't get filled at 599 though. I said to sell 599, but I didn't get filled there. There. Those 13 ticks. 13 ticks on that, John. From 88 down to 75. My fill was 588. Okay, I had 11 ticks slip. Now it's setting up a long trade right here. What's likely to happen is it's likely to get all the way back up here now, all the way back up to 620. All right, so an up close on this bar from 566 up to 570 would be a long trade. Okay. And there, you can see a little better now. 566 up to 570 would be a long trade. All right. So I'm looking to get long on natural gas on an up close of this bar. And it should get all the way back up to like 620 right now. Okay. This is a momentum long trade. So I'm in at 571 now. And it's a momentum long trade. Stop should be right there. This should get all the way up here. All the way up here. It's probably going to take some time for it to do that, but usually what happens with the natural gas, when it has a big reaction like that, it usually goes back to where it came from. Okay. You will often get 100% retracement. All right, and I'm long right there. A down close of this bar right here on crude would be a short trade. 83 is the high, 79 would be the low. That would be a momentum short trade, which means if you get any profit in the trade at all, you got to move your stop to break even. Okay, and I just stopped out on the natural gas and gave 8 of those ticks back. All right, and on the crude, we didn't get the down close. So let me draw you the trend line over here. Okay. 85 down to 81 right now would be a short trade on the crude. This is going to stop me out to the tick and then go and run. It happens. It happens sometimes to the best of us. All right, no trade there on the crude. Price already hit the BBC here, so you stop adjusting it once it's hit the BBC. Okay, now the cycle's going up too steep. I'm not going to take a crude trade here. It did stop me onto the tick, pretty much. All right, we need a pullback here on the gold. All right, you see how everything's all bunched up down here? We look for a partner trade for the pullback, and then look for a trend trade to move it back down. All right. The Russell tanked. There's the trend line. No, it does react a little bit sometimes. Not all the time, John, but sometimes. 55.9 is the high on this. Okay. All right. Does anybody have any questions? I mean, there's a bunch of people in here. Does anybody have any questions? You always enter a tick away from the previous candle up or down close. If I put an order on ahead of time, I put it that way, Albert. If I put the order on ahead of time, I put the order on one tick on either side of where the candle's going to close. Okay. If I don't manage to get it on ahead of time, then, a lot of times I'll have a chance to get a better entry on a pullback. $56.6 is the high on this. Now, we need to see this get down below the trend line here. All right? That's what we're anticipating. $56.3 is the high. 55.9 will be the low. Now 55.9 by itself won't be low enough. It's going to have to go down to 55.5 right there. All right, now it would be 55.6. Now it would be 55.8. Or maybe 7. Okay, on the crude, it's got a high of 76. It's going to have a low of 72. Down close at 72 on the crude would be a short trade. Now that would be at 76. Down close at 76 on crude would be a short trade. All right, now we're not going to have a short trade on crude. Yeah, 55.5 again. Oh no, wait, just a down close off the BBC would be good. 56.7 down to 56.3 on the Russell. Okay, down close at 56.3 would be a short trade on the Russell. On the gold, it's got a high of, there's a down close on the Russell. On the gold, it's got to close below the trend line. I don't think it's gonna. On the Russell, you need 4 ticks profit or close below the MA1 to get the stop to break even. My stop is at break even. Here's the trade. Stop at +1. Get rid of my original stop. Stop at +2. We want to see the green line get all the way down into the cycle. When it does, it should be down here at 55.3 or lower. Okay. But I am out with 2. I had it waiting. I had it waiting at 56.2. Steve. And there it goes down to where it should have gone. All right, down to 55.2. Okay. This down close right here at 94.4 on the gold is shortable. Okay. Now, the reason I say that is because we've got a down close below the trend line before the black step line crossed above the BBC. Okay, and so what you anticipate is the green line's going to get down into the cycle, like it just did over here on the Russell. That's what you anticipate. You always anticipate that. Okay. Okay. We got a whole bunch of people in here. Does everybody understand what's going on? Have you all seen the trade setup? Have you seen the sheet for the trade setup? Just curious. You have not? Okay. I'll show it to you in a minute. Why did you say that, Herman? Oh, you mean because there's so many people in here? Yeah. Yeah, it could be. Okay. This down close right over here at 54.5 on the Russell is a momentum short trade. Okay. It's already gone a couple of ticks in profit. I'm not in it. I missed it. And it's too late to try to get in it. What you can do is wait for a pullback like we're getting now. Hey there. Where is the sheet for the trade setup? I'll send it to you. Dwayne, the workshop from last night is ready to go.
Alrighty, I'll take care of it.
Thank you. What are the hours for members? Well, the partners meetings, they're generally a couple hours long. We had one last night. And we have every Thursday night, usually Thursday nights, we have a partners meeting. Last night's partners meeting was well, this week's partners meeting was on Wednesday because I'm going to be flying tonight during the partners meeting, normal partners meeting time. The regular hours, 9:30 to 11:30, then noon to 2, and then usually one day a week Dwayne will do an after show for an hour or two to make sure that everybody understands what's going on with the alerts. And even if he doesn't get to do it, because they're not necessarily scheduled events, even if he doesn't get to do it, he's recorded probably a dozen of them that you can go watch. Also, in the members area, there's hundreds of hours of videos for you to go and watch and learn. All right, it was just a short trade there on the Russell. Sorry, sleepy. Okay, it was right here. I'm not in it. I believe there's another zone down here on the Russell, right? Darren, let me send that to you. I'll send you a few of them. That one. Just 2. Okay, 3. Zone below 51.50. That's what I thought. I thought there was a zone down here. Right down to the zone. Sweet. This down close right here on crude at 50.73 is a short trade. Okay, 50.73 is a short trade. Here. Okay. There it is, 50.73. Stop 8 ticks away. Looking for 4 ticks profit or close below the MA1 to move my stop to break even. 4 ticks profit or close below the MA1. Where do we stand right now? We're plus 3 on the Russell, we're plus 8 on beans, plus 4 on crude, plus 3 on gold, and plus 5 on gas. That's where we stand on the day right now. Okay,
Joseph
4 ticks
C.
profit.
Go ahead.
Oh, go ahead. I was just repeating myself. That's okay. Go ahead.
Joseph C., give Bert a call, 866-928-3310. And I'm going to forward him your email. See if he can help you out.
Okay, natural gas 55.3 is the high. 553 is the high. 549 will be the low. Okay, so we'd be looking for a down close at 549 on the natural gas. Okay, so we got the crude trade going on here. Now 554 is the high, so 550 would be the low on the gas. Down close at 550. And we got the crude trade going on here. Stop is 8 ticks away. We're looking for 4 ticks profit or a close below the MA1, whichever happens first. We want to see the cycle the green line get down into the cycle. When it does, we should put in a lower swing. Should be down here at 50.65. Okay. Looks like the indexes are selling off here. Soybeans starting to pull back. And on natural gas, 554 down to 550. Okay. Come on, crude oil, get down there. It's getting there. That down close below the black step line right there is a good thing. Okay, stop to break even on the crude. I'm just going to lock in 3 ticks here on the crude because the green line is already through the cycle. All right. And we'll take 3 on the crude. Where's my crude? There it is. Okay. There to there. The Russell's got momentum. Actually, it's a regular slingshot short trade right there at 49.1. 49.1. Natural gas, we didn't get the down close. We are now looking at 552 for the down close on the gas. Okay, down close at 552 on the gas. I didn't fill on the Russell, so I'm taking my order off over there. Yeah, Robert, we're okay to look there. Chris, some of them have pretty high margins, so I would look at the Russell and maybe something else like soybeans. Because the Russell can be fast and soybeans are usually pretty slow. You look at something like that. That's what I would do. Okay. I would have, John, I would have shorted it right there at 49.2 if I'd have gotten, 49.1 if I'd have gotten filled. I actually tried to fill at 49, but I didn't get filled. Okay, no trade here on the natural gas. Black step line is crossing over. Okay, well you can trade one contract on everything, and you can trade, a bunch on some things. The margins on the Russell are $500. The ES, they're $500. This one I believe is about $1,500. This one is about $2,200. This one is about $1,500. This one is about $2,600, I think. This one's $500. Okay. That's what the margins are. Oops. Didn't mean to drop that in there. Yeah, I know. The Russell just had a big move down. We had 3 entry spots in that. One there, one down here. Soybeans is about to give a short trade. It's got a high of 58. It's going to have a low of 57. Regular slingshot trade going right in dynamic support. Herman, you got to pay 18 bucks a month. It's like 18.60 or something like that now, because you got to pay tax on it. But that's if you have over a $5,000 account. If you have under a $5,000 account, then you got to pay an extra 50 bucks on top of that. Okay. Yeah, that's what we recommend, Chris. You just got 37 on the Russell. Great, Pat. $58 down to 57 on the soybeans. That is the low of the day right there, right up above dynamic support. $50.77 is low. $50.81 would be the high on the crude. Okay, $50.81 would be the high on the crude. So an up close there, $50.81 would be a long trade. There's the down close on the soybeans at 57 even. If you're looking for that green line to get down into the cycle, this is just a regular slingshot trade. Okay. We trending? Where are they? Okay, now look for the cycle reset here on the gold. Not the gold, on the Russell. Okay, on the soybeans, the number that it's trying to get down to is 955. 955. Okay. On the gold, this up close right here at 95.0, you could go long on. Okay, Dwayne, I don't have anything else. I was just responding to your email. I do have hours, though, if you want them.
All right, thanks. Yeah, sure.
I believe I have it right over here. Yep, right here. Here, I'll put it in the box.
Why don't you send it to me in an email?
Okay. I'll just reply to that one. Now look for the cycle reset over here on the Russell. Okay. I was short on the soybeans. I'm still short on the soybeans. Okay, it's not going for me right now, but I'm still short over there. The gold, I was long on. My stop should be a break even by now. I was not looking at that, but I was long at 95.1 on the gold. My stop is at break even now. That's it. Okay. So right now it's 11 o'clock. I just got break even on the gold, and it looks like I'm probably going to stop out on the bean trade. Make sure my stop is in the right place. It is. All right. Maybe we're not going to stop out on the bean trade. Nice dragonfly doji. I mean gravestone doji right there. All right. Crude oil starting to pull back. Now, soybeans should have been trying to get down here. All right. The bias is still to the downside. Down close of the current bar should cement it. Cement. Firm up the trade. An up close on this bar on crude would be a long trade. 78 is low. 82 would be the high on that. On the natural gas, we're not trending. Okay, there's no trade on the crude. Okay. I see you doing. It records your whole screen. I guess you're using something else to record it, right? 557 is low, and this 561 will be the high on the natural gas.
No, go to webinar.
It shouldn't be recording.
May have to do with their recent release. I don't know. And I don't know if it's been fixed or not.
Okay. Well, better safe than sorry. All right. 557 up to 561. 557 up to 561. So an up close there at 561 would be a long trade. Oh, I was going to show you guys the trade setups. Well, I'm in that soybean trade right now. Did the step line cancel the oil trade? Yes, it did. Okay, these are the trade setups right here, guys. These are the things that we do in the live trading room. Now, let's see if we can find a couple of them. All right, on the soybeans, still got a bias to the downside. Barely. Actually, it's got a huge bias to the downside now. Where is that big number? Down there. 955. That's where it's going. Let's see. I'm looking for a long setup here that meets the rules. Here's one right here. Perfect. Okay. So these are the two trade setups that we do in here. Okay. These right here are the two trade setups that we do in here. Now, there are more trade setups than just this, but these are the ones we do in the live trading room. Okay. Natural gas just got the up close at 561. That's a long trade there at 561. Hey, that is also the trade setup. MA1 crossed up above the BBC. The MA1 is the red and blue line on price. BBC is the green line. So the MA1 just crossed up above it, pulled away, then came back down and hit it, and closed up. Okay. That's step 1 is the cross. Step 2 is the pull away. Step 3 is the pullback, touch, and up close. Step 4, cycle's got to be blue and above the green line. Okay, blue and above the green line. You get long on the up close of the bar right there, like I just did right here. Okay, 561. 8 ticks risk on every trade. Okay, and I was also going to show you that here on crude oil. Bullish cross, price pulled away, price came back down, hit the BBC, then closed up. The cycle is blue and it's above the green line. The up close right here is a spot to enter on that. All right, we're looking for 4 ticks profit or a close below the MA1 over here. It's going down to 55.50. So we need 4 ticks profit or a close below the MA1. Whichever happens first on the soybeans. It's got a high of 57.25. It'll have a low of 56.25. So when it gets in here to this big 400 number, and it will, then we'll move our stop to break even. It's got to get below that. It's got to get down to 56. Okay. So that is the bounce off the BBC. Those are the rules for the bounce off the BBC. Okay. Now, the other trades that we take in here are when the cycle is the wrong color or you don't hit the BBC. Here's one right here. This is a momentum trade. Here's one right here. Nope, that was the same trade as this, just going in the opposite direction. It crossed down, came back up, hit the BBC, and closed down. The cycle was red and below the green line. Okay, now let's get to a trade that I actually took. Same thing here, crossed below the BBC, came back up and hit it. Cycle was red and below the green line. All right, right here, this is this trade setup. All right, I'm going to draw a trend line down the tops. Now the cycle is the wrong color, so you have to have a close above this trend line. All right, cycle's got to be above the green line, but if it's the wrong color, you need to close above the trend line. So right now, close, it's got a low of 80, it's going to have a high of 84. So I put a buy stop on at 85. All right, so if I get an up close at 84, I'll fill at 85, and I'll be in the trade. Looking for the green line to turn up and get up into the cycle. That's what you always anticipate, that this green line is going to go up into the cycle. And then when it gets there, you should have a higher swing. It'll pull back and do it all over again. Okay. In this case, you got to wait for the up close. Yeah. The whole touch of the BBC thing, Dave, that was if you're doing the CFTC trade. We went over that in like a minute last night in the workshop. But that's when you're using the CFTC colors. Okay. So we still got the low in the same place here at 580. The high of this bar is going to be 584. So if this bar closes up, we're going to be in the trade at 85. Okay. All right, so we're waiting on the soybeans. We're still in a natural gas. Natural gas pulled back pretty deep here. But we're still in it. Here it is. Okay, if you want to take a screenshot of this right now, in the upper right hand corner of your webinar, there should be a little camera. If there's not, click on the middle button, the minimize button, or shrink button, or whatever. I know mine says maximize, but that's because it's already there. There you go. Take a picture of that. How's our natural gas trade doing? There, now take a picture of it. Okay, I gotta put that down because I got 2 trades going on. Okay. No, Joe. We made it last night because I'm gonna be flying tonight during the workshop time. I said it a couple times. But you must have been fishing.
It was in the email that went out Monday morning with the weekly trading zones also.
Yeah. Yeah, he was saying he thought it was just a typo. But it wasn't.
I highlighted it in red. But sorry you missed it. But it's recorded, so you'll be able to watch it today. I'll get it uploaded shortly. Not to belabor the point, but I sent everybody 2 email invitations also. I tried to make sure everybody knew best I could. Best laid plans of mice and men.
All right. So we're still waiting over here on the soybeans. I still like this number down here, 955. It's just got to get through this level right here. You see how the bid has got 1,400 on it and the ask has only got 360? It's a really heavy bid. It should go right through all that. All right, and while we wait for all that, we are long on natural gas at 561. We are short soybeans over here. All right, and we don't have any other trades. Well, let me move this off the gold. Yeah, the gold is all choppy right now. See all these wicks all over the place on the gold, top and bottom? Ugh. No, it's just the opposite, Robert. Okay, Dave.
The question was that I thought a big bid meant difficult to go lower. That's
Yes.
a typical misunderstanding, if you will, of that. what we've seen over the years by looking at it just a little differently is that the larger volume, be it on the bid or ask side, tends to act as a magnet. It tends to draw price to it. And as it draws it to it, so price will go down to meet those large amounts on the bid. Whether it's going to trade all the way through, it depends on the strength of the buyers or the sellers, whichever the case may be. But it will be drawn to where there's a lot of inventory. So that whole thing about, there's a big wall, no way to get through it. If you just watch your DOM, you'll see that crumble every time. Look for an imbalance in your DOM. Set your DOM so that it totals up the number of contracts for you on the bid and the ask side. And wherever the larger number is. Now, if it's like, if the difference is 10,000 on one side and 11,000 on the other, that's not significant enough on the S&P, for instance, to really matter. But if it's 10,000 on the bid side and 19,000 on the ask side, and you have to know what market you're trading in and what the bid-ask balance normally looks like. You understand a day when you have ordinary volume trading, and typically at any given hour of the day, what's on the bid and what's on the ask. It's going to be the heaviest around the Wall Street Open, leading into and just after, then out during lunch, and then some days warm back up a bit in the afternoon. But again, depends upon the market. So watch it, study it, trade it in sim, get a feel for it. And don't leave the sim until you're consistently profitable. What does that mean? It means using one contract, you're able to earn $100 per day in 10 trades or less, 10 days in a row. Right there. Nothing nebulous or ambiguous about that. It's carved in stone. Also, if you're on the trial, or if you were invited here from Dean's webinar, or if you somehow got here today without being on an official trial, if you're in here and you've not downloaded the platform and the indicators, you should. That's a very important part of understanding what we do. Watching Michael trade 1, 2, 3, 4, 5 different markets is going to confuse you until you sit with one market and the platform and the indicators and begin to understand that it's all merely a repetition of the same thing from market to market to market to market. We trade crude exactly the same way we trade gold, exactly the same way we trade the S&P, exactly the same way we trade the Russell, exactly the same way we trade natural gas. All markets are the same. Our methodology seeks out and finds the underlying rhythm of the market, highlights it, and presents you with an endless array of trading opportunities. You shouldn't attempt to trade 6 markets. There should be a warning across the bottom of the screen, don't try this at home. Watch 2 markets, find 2, pick 2, maybe one of the indices and something else, or because the margins are better in the indices, maybe you just go with that. Someday you'll graduate to perhaps 3 markets. You only need 1 market. You only need, if you're trading the S&P, you only need 2 points a day to make your daily goal, 8 ticks. That's all you need. It's not about taking 100 trades a day. The reason Michael trades multiple markets and the reason we stay in here for 2 hours each day is for the purpose of teaching and training to help you better understand how the methodology works so that you're able to see entries and trades from start to finish over and over and over and over, because that's what it is. It's repetition. And once you understand how to read the indicators, once you own the indicators, then all you have to do is show up when the markets are open, which is around the clock for most markets. Show up when the markets are open and wait for the trade to present itself. And when the trade presents itself and the 5 conditions are met, plus your divergence in the lower panel, you simply execute the trade. It's about thinking in probabilities and making sure that the odds are in your favor. If every day you're trying something new, if you're chasing your tail, it's a very vicious cycle, and almost everyone falls into it. At some point, you have to plant your flag, put your foot down, and say, you know what? That's it. I'm done. I'm going to actually learn how to trade. I'm going to stop with the black boxes and the crystal balls, the gurus, the wizards, the magical indicators and the mystical time frames, and I'm just simply going to learn what makes the market tick. When the indices were climbing this morning, when the Russell was headed up, as an example, leg retrace, leg retrace, leg retrace until there's not another leg. That means you're either going to go for a deeper retracement or a reversal. When the CFMA1 crosses below the BBC, well, watch for your reversal. Now it's going to be leg retrace, leg retrace, leg retrace in the opposite direction until what? Until you don't get a lower low. And so whether the market is trending higher on the day or trending lower on the day, trending higher on the week, trending lower on the week, you will still experience that back and forth action, back and forth action. If you go back in crude, and I'll show this to you guys today on the radio show, if you go back in crude on a daily chart to July of last year, many of you have already seen it. It's no different than what Michael's doing this morning. In July of last year, there was, I forget the day, it was the 14th or the 17th, but it's clear as day on the daily chart, bearish cross, price pulled away, price pulled back, there was a down close, and then if you sold the open of the next candle, you could have rode that market. If you're a person who holds positions overnight, you could have rode that market down into October before you got a serious consider getting out of your position type of signal. And I'll show that to you guys today on the radio program. It's not a trade that we didn't say the market's going to fall for 6 months or we're going to all-time new lows in oil, because we're not prophets. We don't predict the future. All we knew is that based on the daily chart and based upon our indicators, which are valid in any time frame, tick charts, volume charts, whatever you want to put them on, we knew that there was a short setup there. Did we know how far it would drop? No, no one did. Lots of people out there taking credit for it, saying they did, but no one did, because it's not given unto man to know the future. I didn't make us that way. Each generation has its share of people who, you know, there's the Gene Dixons and the Uri Gellers of the world. But deep down inside, as much as you want to believe it's true, you know it's not. But yet man chases it and spends years and thousands upon thousands of dollars trying to know the unknown. Since you can't know the unknown, I mean, let's just face it, you can't. You cannot know the unknown, all right? Our indicators are just fancy reading glasses. When you put them on, all of a sudden, you can see clearly what was already in front of you. So if you can't know the future, well, what can you know? Well, you can know what's happening right now. Why not use that? Well, I might get stopped out. If you're going to trade for a living, yeah, you're going to get stopped out probably every day, possibly multiple times. And there'll also be days you sit down and you put on a trade and it runs the 8 ticks or the 10 ticks, and you're done for the day and you're left feeling kind of empty. And you have to learn to sit with that feeling and get comfortable with that. If every
Right,
time you
guys.
get into the market, it runs the other direction, you've got a great eye. You just got to learn how to put it to work properly. If you always get stopped out to the tick, you got a great eye. You just don't know what you're seeing yet. And once that becomes visible and available, then you have an opportunity to move from the 90% line to the 10% line. There really are 2 lines. You know, the figures that have been published for years by Futures Mag and everyone else. There really are 2 lines. And you should all, we talked about this in the partners meeting, you should all ask yourself, what do the people in the 10% line do differently than the people in the 90% line? See, the people in the 90% line, they're not bad people. You know, they just wanted to click the mouse and make a few bucks. What's wrong with that? Some of them even had a charitable heart and a charitable mind. They had some money. They just wanted to multiply it so they could do good works with it. But just clicking the mouse and making a few bucks is not reality. People in the 10% line had to do something different. And I promise you it wasn't a black box or a crystal ball or a guru or a magical time frame or a mystical indicator. What they did was they learned how to trade. Go ahead, Mike.
Okay, I was just saying to everyone, I got out at break even on the soybean trade, I stopped out on the gas trade, and I'm long on crude. I'm locking in 2 ticks profit on the crude. This is going to be my last trade of the day. It's 11:26.
If you don't
This is gonna be
download
my last
the
trade of the day.
platform and install the indicators, at the end of the week, you might go away saying, wow, that Michael, he can sure trade good. But you'll never know if you can trade using this methodology. It's 5 ingredients. Every trade starts with a cross, bullish or bearish. Price pulls away, price pulls back to physically touch the BBC. Up or down close based upon long or short trade. Buy or sell the open of the next candle. At 4 ticks profit, you move your stop to break even. You use aggressive risk management. If you only get 4 ticks out of a trade, we might have to take 3, 4, 5 trades, but that's okay because you have 10 trades per day to make your daily goal, which is $100 per contract. You only add contracts with profits earned in the market. Otherwise, you're simply throwing your money away. Most people won't tell you that harsh truth, but that's the harsh reality of it. You want to stand in the 10% line, learn how to do that.
All right, guys. Well, with that, we are going to wrap up the live trading room. Today, we're going to do the spreadsheet because it is 11:27. Today is 9 April. Now, today in soybeans, we made 8 ticks profit. That did not register. Okay, today in soybeans, we made 8 ticks profit. In the Russell, today we made 3 ticks profit. That one worked. In natural gas, today we lost 3 ticks because we just stopped out of that last trade. That one worked. In crude oil today, we made 9 ticks. That one worked. And in gold today, we made 3 ticks. And that one worked. And today, it took 8 minutes and 2 trades to get to our goal, and that was $100 per contract. We took a total of 5, 10, 15, 21 trades today. 21 trades. Okay, change this to a 6. All right. So let's do this. Go through this again. Today we made 8 ticks in soybeans, or $100 a contract. We made 3 ticks in the Russell, $30 a contract. We lost 3 ticks in natural gas, $30 a contract. So here we're at 100. Made 9 ticks in crude, or $90 a contract. So we're at 190. Made 3 ticks in golds, or $30 a contract. So we're at $220 a contract on the day. It took 8 minutes and 2 trades to get to our goal for the day. When we closed out that trade, we're at $100 a contract. Took a total of 21 trades today. On the month so far, on the month of April so far, we're at $1,990 a contract in 6 days. So if you apply an $8 commission to every trade we've taken so far, you would have a net profit of $1,158. If you applied a $5 commission today, you would have a net profit of $1,470. The average daily with an $8 commission is $193. The average daily with a $5 commission is $245. On the month, on the year so far, we're up $16,495 a contract, and the average gross daily for the month so far is $331 a contract. Okay. So I'm going to save this. Save it. Minimize it. 11 on the BONNG. Correct. No, we got 13 on that. 13 on the breakout in natural gas. There's still something going on, Nathaniel. I'm still not 100% yet. All right, I'm gonna show you guys how to get into the next session in just a second. Okay, to get into the next session, you have to go here. Go there. Okay, it's loading up. To get into the next session, you got to go to the homepage at cfrn.net, and in the right-hand column, scroll down to where it says, click here, and click there. And scroll down to where it says, watch live now, and click there. And fill out this little form. All right, when you fill out this form, you'll be sent a link to get into the next session prior to the next session every business day for the rest of the month of April. Now, the next session, guys, I do a recap of everything that I did in here, the trades I took, the trades I missed, trades I didn't take, trades I stopped out on, all that stuff. I do a recap of all that for all the markets that I traded. There, finally, the soybeans give the down close, and they're going down. 55.50 is what I said they should get down to. They're actually going to go lower than 55.50. Let me just look. Yeah, 55 is looking pretty good right now. Yeah, I forgot what I was telling you. Anyway, if anybody's got any questions about anything, you can give me a call. I'll give you my phone number